Welcome back to Coin Consciousness, your one-stop shop for everything crypto. I'm your host, Tons, and today we're talking market intel. And we're highlighting the different metrics that you can use to inform your decisions when buying cryptocurrency. Today, we're focusing primarily on Bitcoin. And this is one of three ways I would say that you should decide which coins to buy.
We want to look at price, we want to look at adoption, as well as technical analysis.
And then you also want to look at the trajectory of the coin. And so that's where I think adoption and technical analysis will help you to get to that conclusion. So without further ado, let's jump into this market intel. All information is provided by Chainalysis and CoinMarketCap. So be sure to stop over there if you would like to look at the information yourself. So let's look at the Bitcoin price. Currently sitting right under $17,000 at $16,800 just about. Bitcoin isn't at an all-time high, nor is it at an all-time low. So if you're just looking at the price, you may look at Bitcoin as being down, and it is, truthfully. But we might also want to look at the 24-hour volume. A cryptocurrency's trading volume is the number of coins that have exchanged hands during a defined period of time, usually 24 hours. In other words, the 24-hour trading volume of a cryptocurrency is how much value of a coin has been bought and sold over the course of a day. 24-hour volume doesn't correlate with the price, as you can see on the chart below, but it still is a good indicator of the use of the coin.
So even though Bitcoin has been on a downwards and sideways trend over the past couple of months, we have to look at other indicators to develop a full understanding of what's going on. 24-hour volume is an extremely important indicator for traders to determine the future profitability of cryptocurrencies. So for example, a coin with a relatively low trading volume suddenly shows a very high trading volume. That could indicate increased support and an impending rise in value. By analyzing a coin's volume over both short and long-term periods, investors can predict the moves it's likely to make. An accurate prediction leads to a more profitable trade. So we're currently looking at CoinMarketCap's historical data for Bitcoin. And this is really interesting. It goes all the way back to 9 years ago, back at 2013 on the right side, and on the left side is going day by day. The reason this data is actually very interesting is because if I wanted to convince somebody of why they should be a long-term holder of Bitcoin, I would just tell them, look at 9 years ago. 9 years ago, if you bought Bitcoin at $625 and held it, it would be worth $16,829 as of today, December 20th, 2022. So even though Bitcoin is down, you would still be up on your money in the long term. This historical price data puts everything into perspective because for a long-term trader, it can let you know if I hold this over multiple years, I will almost guarantee myself a return. And on the flip side, for a short-term trader, it might influence them to hold long-term because there might be a year where Bitcoin finishes lower than it started, but there is no evidence of 3 consecutive years of Bitcoin going down. So you could confidently tell someone who's looking to trade short-term, hey, guaranteed if you hold for 3 years, you're gonna see a return on your money based on the historical price data. Up next, we're looking at the amount of Bitcoin held on exchanges. Inflow to exchanges fluctuates with changes in market sentiment. For instance, an increase in inflows suggests increased selling pressure in the market. The more we see Bitcoin moving on to exchanges shows that people are looking to cash out in exchange for fiat money. This indicates that people believe the price is at a high, or it could reflect negative market sentiments in which retail buyers think that the price is going to crash. A bad economy can also lead to people putting their crypto onto exchanges and selling. People sell in a bad economy or when there might be a world tragedy that affects world markets in order to prepare for if they might be laid off or goods and services increase, the cost of living increases. So when you see Bitcoin flowing off of exchanges, that reflects that people are feeling bullish and believe that their crypto is going to increase in value, so they want to hold it in their cold wallets, hardware wallets, and off exchanges where it can sit safely for the long term. So I hope that was helpful. Just want to give you some other indicators that you can check out when informing your investment decisions. That's it for today. It's going to be a shorter episode. Be sure to tune in tomorrow for more Coin Consciousness. Stick around for episode 30 for a face reveal. And make sure to subscribe, like, and comment below. Don't forget to hit the bell notification, and I'll see you in the next episode. Peace.